Welcome to our eSignal Weekly Forex and Futures Forecast. My name is Jay Norris. I teach trading at Trading University. First market we'll be taking a look at will be the Australian US dollar. Aussie US dollar, we called it last week. We said, hey, the short-term patterns are down. As a day trader, you'd be working the short side selling rallies. However, you have some interesting support down there. Look, it went right to that support level. That's 50-day support, so that's a pretty significant level. So we're looking at the Aussie now to see if it holds that level and posts another higher low here. If you post a higher low, that's going to be significant. The Aussie puts itself in a position to tackle 75 even on the upside. Next market, the dollar Swiss, what we're calling the trade of the decade. There you can see that the big breakout we had since we came on last week. Look at that, bam, 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 blasted through there. You know, a whole lot of room on the upside. I can't stress it enough. You have to be buying dips in this market as an investor for sure, an intermediate swing trader as well. Even a short-term guy, you have to be focusing on this market. Look at all the upside here. Trade of the decade right here. Long the dollar Swiss. Get my patterns out of the way. And if you just look where that guy's been and what it's done, how it's bottomed, and now putting itself in a position to move higher. So, you know, 105, we think that you'll see probably pretty quickly into the new year, possibly even by year end. We're looking at 105 in the Aussie. A lot of room up above here. And there's your dollar Swiss back on the daily chart where you can see all patterns higher. Next market, the dollar index. Here you can see your 25-day pattern and your 50-day pattern, both higher. Pretty good resistance at 98 even, a little above 98 even. That'll be that secondary pattern. You take that out, you're going to have a pretty nice breakout here. Hasn't done it yet though, so a little above 98 even, the level to watch here. Dollar index, we're definitely buying dips. That 50-day pattern, very influential. The only thing slowing this guy down, of course, would be that higher time frame resistance. The only time a longer term pattern is significant is when you're right at that pattern structure, and you're right at secondary pattern structure. So yeah, you got the 25 and 50-day up. I like that. Still buying dips, no doubt about it. On the other hand, the closer you get to 98 even, the more you need to be aware of potential resistance right there. Here's the euro. We pointed out this level just below 109 even, secondary support. Same story. You have to be aware that it's there. On the other hand, you took out a long-term trend line here. We like seeing that. You know, the world sees that too, so we want to see what everyone else is seeing in that regard. As we said last week, shorter, intermediate term, even long term, we're definitely still selling rallies. On the other hand, you know, you get on top of support like that, and that market can shift two-way in a hurry, and that's what we talked about last week, two-way trade. I don't mind two-way trade. You don't have to wait for a trade, right? There's always a trade in the market. You can both buy and sell, and the closer you get to that level, then there's nothing wrong with taking the short-term buys there. On the other hand, overall, you got to keep your eye on the big picture, which is selling rallies, which is downside here. This is a bear market. The one thing I'd say that's different about today's markets, everyone says, oh, the markets are different. The one thing that's different to me is that counter trend patterns take a lot longer to play out. And I'll make an example here going out to a weekly in the euro chart. This itself was a secondary move, but it took 2 years. So no matter how you cut it, that's a primary pattern because it's over 9 months. It's 2 years. Same story here. You're 9 months into a counter trend move, so you have to account for that. So to us, it's a secondary pattern. Here it is back on the daily chart. Yeah, overall, it's a counter trend pattern, but you get a pattern that goes beyond 4 or 5 months. That's getting longer term there. So we have to be aware of that counter trend moves are taking longer to develop, and we just have to be patient with them. We have to do what the market's telling us to do at all times. Gold market, gold turned lower in a hurry. 5 and 10-day patterns down. On the other hand, you have support, the 25-day pattern support right there, and then your 50-day pattern support right there. Here's all I need to say about gold. It's a bear market. When you scrunch up that chart and you go back, there's no denying it from the pattern. That's a bear market. So gold, again, I'm a broken record. It's a bear market. I kind of wish it would have given us a better formation here. It got right to that 50%. Generally, you get to a 50%, a big level like that, and the market makers will throw it beyond there, and you could run some stops, and then you get a kind of an exhaustive momentum higher, and that's the time you want to sell a market. In this case, gold, old gold couldn't get beyond that 50%, and look at how quickly it slumped. You sold off $50. That's a pretty big move in gold. So watch this level here. You can see that overall secondary pattern, you're still putting in higher lows. So watch gold for the higher lows. Maybe not so enamored with this 1031 level, but watch it just around 1115 or so. That may be a big level to watch for a short-term bounce in the gold, but overall, long-term, it's a bear market. Here's your most significant market coming up next. This is the one everyone's watching, with the Fed about to do what it's going to do. Big shift up last week. You shifted that 25-day pattern back up. See that green box there pointing higher? There you go. So that's a big shift. So 5, 10, and 25-day patterns higher. Secondary pattern up too. There's that secondary pattern I was talking about. These, it takes a while for markets to do what they're going to do, and your secondary pattern is bullish here. What's holding this guy back would be that 2.3% level, but there's a lot of room between here and there. So that's definitely one to watch. A very, very important market. It's U.S. interest rates. There's no way around it. If rates go higher, that's going to strengthen the dollar. That's going to weaken commodities. On the other hand, if rates go lower, that would be support for the euro. So that's why I say this is definitely the most important market out there. We're going to see what the Fed's going to do next. My name is Jay Norris. I teach trading at Trading University. Thank you so much, and we'll see you next week.